James Bevan, Chief Investment Officer at CCLA Investment Management, joins us today. Hi, James.
Good morning.
Equity prospects look reasonable, growing risk for bonds. Tell us about the new supports and the longer-term supports for equities.
Well, the real issue is that companies still have excellent free cash flow yields. And what's really important now is investors are beginning to feel more confident. And therefore, it's not just the fundamentals having to drive the story, it's actual fund flows. And that, I think, is really key.
Yeah, and you're saying, and I like this point, core Europe, via the ECB and its banks, now own $2 trillion of peripheral European assets. What are the implications, James, of that figure right there?
Well, we have bought time in terms of the European problems, but of course, all that's happened in a sense is that they've been pushed under the carpet. So actually, I'm quite fearful of the prospects for Europe. I think that the austerity programme ultimately is extremely dangerous for the periphery. And we've never had a democracy having to cope with the fiscal restraint and the monetary policy of the ECB.
The contra-trade, consequently, you say is to be underweight Euroland, but you are keen on Italy, you are keen on domestic Germany, dollar earners, but you're nervous about Spain, aren't you? Is that nervousness compounded by Friday's budget?
Well, I think we've heard it all today.
Yeah.
We've had guests telling you that the Spanish banks are in problems, that clearly the debt issue in Spain isn't going to go away. We have 50% of under 23-year-olds in Spain with no jobs. That, I think, is a really very dangerous cocktail.
What are the types of companies then, James, we should be looking at within the continent in Europe? Those companies that have a big proportion of their sales in the United States, and there are four that you particularly highlight, aren't there?
I'd be after Ahold, I'd be after Novartis, I'd be after companies like Michelin. I think we should be looking for companies that have strong free cash flow yields and excellent balance sheets, are in a sense global branded products, as opposed to simply companies that have to fight their way through.
I mean, some
Europe.
of these have got a huge potential upside. You say
that would be my expectation. I
mean,
see companies.
Novartis, 78%.
Well, you say, how do you get to a valuation? I look at
Yeah.
the free cash flow that Novartis currently delivers. I look at the cash flow return on its capital.
Yeah.
And I say, what should an investor be prepared to pay today to own the future rights to Novartis cash flow? I see a share price that is way in excess of the current price.
We had the Tankan survey today out of Japan, James, and it was a slight disappointment, -4. And manufacturers are saying, we think the yen is going to rise come the end of this fiscal year another 6%, another 7%. But you're saying you've got to get into Japan. Why is that?
I see the opportunity for monetary easing and fiscal easing throughout this year, in complete contrast to virtually every other major economy. And I see companies that are actually extremely lowly priced. If you said to me, name a global automobile manufacturer that is well positioned and cheap, I would have to tell you it was Toyota. I look at global technology. I look at Carciera as a great leader in what it does, and at a share price that simply discounts.
And that's a big company with US exposure.
Absolutely.
You like that theme, don't you?
Definitely.
And companies that dominate their markets, Fanuc and JSR as well?
They are huge in Japan. I mean, even when people think about Japan, they expect to only focus on an economy that has been, relatively speaking, underperforming. But actually, if you look at the vibrancy now within the Japanese economy, I see great opportunities.
Equity risks, though, James, do remain. The US, fiscal tightening. China, yes, we had the PMI number today, but some say it's misleading.
Do you know, I feel that we are climbing a wall of worry, and that is the strongest foundation one can possibly imagine for equity market progress. It's when people say, no more risks, you could buy equities for years back. That's when one has to be worried. Right now, because the risks are reasonably visible, I think this is an excellent moment to buy.
And bonds, what do we do with them, James? Underweight position?
I would definitely be underweight bonds, particularly government bonds. I'd be quite nervous of credit, simply because when I look at the default rates, discounted by current share price, bond prices, I just don't see enough fat available for investors.
So, James, first quarter, Stoxx 600 in Europe rose by roughly 7.7%. Can we see similar sort of gains come the end of the year or not?
I think that one will see modest progress in capital terms, but I think that one can get a decent dividend and a dividend that grows, and therefore value will be very supportive. And one look at what Diageo is up to.
Yeah.
There I see opportunistic focus on real value that is now available. It will be earnings accretive, taken off a strength of balance sheet.
James, thank you very much indeed. James Bevan there, Chief Investment Officer at CCLA Investment Management.